All right, good afternoon, everyone. This is Joe Bicella here at Chaikin Analytics, and I'd like to welcome you to 5 simple steps to find winning stocks, combining fundamentals and technicals to spot winners. Presenting today is Sandy Chaikin, co-founder of Chaikin Analytics. Now, throughout our presentation, please submit your questions using the Zoom Q&A window, which you can access in the upper left-hand corner of your screen. We will be available throughout the webinar to respond to your questions. As a reminder, this webinar is being recorded and a copy will be sent to everyone who has registered. Now, before we get started, we have a special guest with us this afternoon, trading expert at specialist.com, Stephen Primo. Stephen, take it away.
Today, yes, this is Stephen Primo, president and founder of Specialist Trading. And as Joe stated, we have a great educational presentation for you today because we have Sandy Chaikin who's going to be speaking. She's the co-founder of Chaikin Analytics, and she's going to demonstrate today how she combines fundamental factors and technical indicators in just 5 simple steps to find winning stocks and how to manage her portfolio. In fact, you're going to learn today how to find the simple rules that Sandy follows to know when to buy or sell a stock. You're also going to see the danger signals that alert you before a stock drops. She'll teach you how to save time by managing your stock portfolio in less than 15 minutes a day. And then lastly, you're going to see why 2017 could offer once in a lifetime stock market opportunities. So as I stated, this promises to be a great presentation. So please join me in welcoming Sandy Chaikin.
Steve, thank you so much. And thank you for inviting your community to our presentation today. And welcome also to the Chaikin community, which is also on today's webinar. So to get started, I first need to get, I need to state this disclaimer. Chaikin is not registered as a broker-dealer or investment advisor, either with the SEC or with any state securities regulatory authority. Chaikin is for educational purposes only and is not a trade advisory service. Past results of any trading system or methodology do not guarantee future results, and users bear sole responsibility for their own investment research and decisions. Okay, I'm always thrilled to get that out of the way. All right, I always like to start with framing the problem and where we are today as an investor community. What's going on? Historically, the S&P has grown at an average of almost 10% a year over the last 20 years, but individual investors have only averaged 2.5%. And the research shows that the primary reason is that people buy on emotion, not fact. We're not machines, so our darn emotions get in the way. The challenge then is to find those winners. You know, how do you find those winning stocks? How do you know when to buy and sell? And how do you follow a set of rules to take the emotion out of the equation? And that's what I'm going to be going over today. So as Steve said, we're going to be looking at how to find those winning stocks and how to make buy-sell decisions with confidence. Because I'm a firm believer that confidence is really at the root of being a good investor or trader, that if you're not confident in the decisions and investment buy-sell calls that you make, you're not going to make good decisions, or you're not going to make a decision at all. You're going to freeze. Neither of those are good options. So we want you to be confident versus fearful. And I started out as a fearful investor myself in 2012 when I started investing. So I know how it feels, but I've been able to develop this 5-step methodology and follow the set of rules that has really elevated my performance way over the top. So I'm going to show you how I find stocks such as this, Anthem. This is in my portfolio. And this is a chart from Chaikin Analytics, which is the platform on which I'm going to be sharing with you today. The stocks that the examples that I use are all stocks that I either own or have owned at some point in my life, except for the bearish stocks, because I don't own any bearish stocks. But this is what you want to invest in. A stock like this, like Anthem Healthcare. Healthcare and financials have been in the news lately as, you know, the top performing categories. So I mean, this is a stock I bought back in mid-May where that yellow arrow is, and it's up 6% in less than 2 months. So this is the type of chart you want to look at. This is the type of stock you want to find. And I will show you exactly how I found a stock like Anthem. But what's the point of all this? Why are we investing in stocks in the first place? Well, I was brought up in an era. I'm not that old, but I was brought up in an era where it wasn't polite conversation for women to talk about money. So, talking about making money was just like really taboo. So I've overcome that because the whole point of investing in the stock market is to make money, right? I mean, that's why we're doing this. That's why we're here at the table. And the reason to do that is that it not only helps fund our retirement, but also it helps us celebrate along the way. And for the vacations that Mark and I have taken since I started investing in 2012 with Chaikin, we've paid for these vacations with the proceeds from my profits. So keep that in mind as you're thinking about the stocks that you want to buy or investing in the stock market. Have a goal in mind. What's the goal? What's the end game here? Do you want a down payment for a house or a car or, a vacation? I mean, have something in mind because it makes it more attainable if you're tied to that deliverable benefit. All right, so why should you listen to me for the next hour or so? Well, I've beaten the S&P 500 since I started investing in individual stocks in 2012. And since the research shows that 4 out of 5 pros underperform the S&P 500, then by relevance, I'm also beating 4 out of 5 pros. I started out in 2012 as a novice. Mark and I started Chaikin Analytics, and I had up till then invested strictly in mutual funds. But in order to understand what we were marketing, obviously, I needed to immerse myself in the stock market and understand the platform. So I started investing first with stocks that I knew like eBay and Yahoo, and then I got into some of the lesser known stocks like Southwest Air and Skyworks. I mean, as a point of just interest here, in 2014, I was in and out of Southwest Air and Skyworks from early on. Those two were the best performing stocks of 2014. And just the proceeds alone on Southwest Air funded our trip to Turkey for 2 weeks and more. So, tie it to something that is tangible for you and doable, and it makes it a lot more fun. So last year, some of the triple-digit winners that I were in included Senta, Quad, and NACO, as you can see there. And this year, I'm in stocks like Anthem, Excelis, and Lam Research, all of which were up almost 50% year-to-date in a market where the S&P is up 9%. So let's back up for a second. Let me just walk you quickly through how I started investing in stocks in the first place. Initially through 401k plans when I worked in the 70s and 80s and 90s for Elizabeth Arden, L'Oreal in New York, and then the Franklin Mint. And their 401k plans gave us options of investing in mutual funds. And I fortunately picked some really good funds based on their performance, past performance, got into the Fidelity Magellan Fund and the Legg Mason Value Trust. And those two funds did exceedingly well. So that was good for a while. But then as my career blossomed and I got more and more busy and the fund grew higher and higher, I felt that I should really have a professional look at this because I didn't feel confident that I could make good decisions, going forward. And that I really had just gotten lucky invested in those, Peter Lynch and Bill Miller's funds. So I engaged a wealth manager at the suggestion of a good friend, and things were going along okay. He actually sold everything that I had and put me in 8 or 10 mutual funds of his choice, which Mark, later told me when he and I connected that that's pretty much industry standards. But that was okay until 2008. And as you might recall, in the fall of 2008 is when things really started to hit the fan. And I remember calling this financial advisor saying, look, it looks everything's pretty clearly headed in a downward spiral. Don't you think it would be a good idea to sell? And the response always was, no, it's okay. Just hold the course. It'll all come back, and just stay invested. Well, after I'd lost over 40% going into 2009, I just really, I was so demoralized. I said, I just can't do this anymore and watch this fund go down. So, I finally got the confidence to say, this isn't working for me. I'm going to close the account and take it back under my control. I mean, heavens, who can't do more than losing 40, can't do better than losing 40% and pay a fee, if you don't mind, on top of that. So this was basically how I looked in 2009 when I looked at my portfolio statement and saw that I was down 40% from the year before. So that was pretty much a turning point for me. And what that did was say to me, boy, Sandy, you've really got to take control of your financial future and learn how to manage your own money. Because after all, I worked years to accumulate that 401k plan. And then I would blindly turn it over to this financial, thinking, well, he's the expert, he'll know what to do. But really, I say to myself and I say to you, nobody cares more about your money than you do. So whether you're working with a financial advisor or not, and many of our clients are financial advisors, and that's terrific, but you still want to be part of the conversation. You want to be engaged. You want to be involved in those decisions. And you want to be able to vet those stocks or mutual funds or ETFs that your advisor is recommending to you, rather than just do what I did and say, sure, whatever you say is fine. So I did take control in 2009, sold what he had, liquidated his assets, put it into a Vanguard self-managed account that I opened. And since then, I have thankfully more than tripled where we were back in 2009. So everything's good now, and I'm confident, as you can see here in the pictures, and it's all worked out. But I say this story to you so that you don't share in this pain and you can avoid these same mistakes, that I unfortunately made. So let me pause here for a minute to ask you if you'll fill out this little poll that Joe's going to put up about what are the challenges that are facing you right now. What's holding you back from making a buy-sell decision, or freezing, when you're looking at a stock and you're watching it go down, but you can't push that sell button. And I see Joe's put up this little poll. You can check as many as are applicable, right, Joe?
Hey, yes, that's the case. Sorry about that delay there.
That's okay.
Yeah, I see that there's a lot of responses coming through right now. So yeah, as many of those that you see on the page, feel free to go ahead and just select those off. But we'll give it just a few more seconds. I see a lot of people, looks like almost half the people have already responded, which is great.
Wow, cool. That's great. Okay, so want to give it another few minutes to have the rest of the team fill in their replies? Great. Okay.
Yeah, it looks like close to 60% now. So
okay.
Yeah. We'll give it about 10 more seconds.
Okay, great. Thank you.
Mm-hmm. All right, great. Thanks, everyone. And looks like the top responses, timing, when to get in, when to get out, information overload, uncertainty about the market, volatility, the Fed. Those look like the top few. Letting emotions getting in the way seems to be a close fourth, by the way.
Okay. Awesome. Okay, thank you. And thank you all who participated in that. That's really great. Very helpful. Well, I have anticipated those replies because that is what I hear when I've been asking this question over the past several months or so. So I will be addressing those. Those are already baked in. Those replies and ways to overcome those challenges are already baked into the presentation. So what are we going to talk about? 5 steps to invest properly. I'm going to go through each of these 5 steps, but what you might want to do is take out a pad of paper and a pencil and just write these things down, because this, if you have a proven methodology that you trust, it's a lot easier to follow it than to follow your own emotions and whims, and the whims of the broadcasters and analysts you hear on the financial news sites. So I encourage you to take out a piece of paper and pencil and to just write these things down. And I'm also going to give you some great stock ideas too that you might want to check out. All right, so the first step is to trust a proven methodology, proven tools. And this was one of the questions, or one of the check boxes that may not have been in the top 4, but I'm certain there are people that did check that off. What do you use? What can you depend on to give you reliable input about how to make a decision on a certain stock? Well, for us, it's the Chaikin Power Gauge rating, which you see right here. It looks like a very simple meter, basically, but it's not simplistic. What this does is this is an algorithm based on 20 factors, and this looks at the potential of a stock to out or underperform the market over the next 3 to 6 months. And that is the foundation of everything we do here at Chaikin. So even though it looks very simple right here, it has tremendous power underneath it. There's a lot more going on underneath the surface than meets the eye. What this allows you to do is to cut through that information overload, cut through the clutter and get to a very disciplined approach to evaluating a stock's potential. So as I said before, it looks simple, but it's not simplistic. So on the right, you'll see data that the Wall Street pros look at every day when they're evaluating a stock. And Steve, feel free to chime in, because I know when you worked on the floor of the exchanges, you probably looked at data like this too to draw a decision. However, if I looked at this data, I wouldn't have a clue what it said or how to draw a conclusion from it. So the way this power gauge got started was after that whole aftermath of the 2008-09 meltdown, when Mark, my husband, who had been in Wall Street for over 40 years at that time, creating tools for the pros, said, I've done this 40 some years for pros, given them the tools they need so that they can make better decisions for their clients. But what's really critical right now is that individuals like you, Sandy, have professional quality tools, but in a way you can understand it. Because now with literally billions, I think there was $40 billion. I think the number is huge, of the money that left traditional brokerage firms and went into self-managed accounts like myself, of people like myself who became really disillusioned with Wall Street. So we went into our own self-managed accounts, but we didn't have the education, the tools, or the wherewithal to know what we were doing. So he came out of retirement. Mark had sold his company to a division of Reuters 10 years prior. And he came out of retirement to create the Power Gauge rating as the basis, as the foundation for the platform that is Chaikin Analytics. So what you see here on the left is the Power Gauge rating. As you can see here, it gives an overall rating of a very bullish outlook for applied materials. And you can see from the drill down that there are 4 basic components of that. And underneath those 4 components are each 5 factors. So the model is made up of 20 factors. And that has gotten the attention of not only a lot of individuals, but a lot of pros in the workplace, as well as John Carter, who's a well-respected financial, he writes commentary and newsletters and has indicators himself. It's a big following because he's very well respected and well thought of. So he calls this power gauge rating an objective awesome meter for stocks. He says there's a lot of hyped out tools out there, but a single tool that combines 20 fundamental and technical factors to anticipate a stock's profit potential got my attention. It's called the Chaikin Power Gauge Rating. At first glance, I thought this looked like an objective awesome meter for stocks, and he likes that it includes fundamental and technical analysis, because most models are either fundamental or technical, and this model actually combines both. It's 85% fundamental, 15% technical. So what are those 20 factors? Well, here you see them listed out here. And you can drill down and get a power gauge rating on any one of those 20 factors. There's 3 that I highlight here. Those are the 3 that I tend to look at. And when we go into earnings season, like we are going into right now, I'll also look at the earnings component. But other than that, I really just focus on the overall rating for stock. So if I'm going to be buying a stock, I want that stock to be bullish at the very least, ideally very bullish. And why is that important to depend on a model, or why can you depend on a model? Well, one of the well-respected quantitative analysts says models beat human forecasters simply because they reliably and consistently apply the same criteria time after time, as opposed to human beings who are swayed by emotions and opinions. And there we get that emotion again, right? Because we are humans and have brains and emotions. We're just not machines and computers who can just, reliably spit out the same criteria and data. But the power gauge rating can. So it behooves us to depend on that. To give you a little bit of insight, or a little bit more kind of added sauce as to confirmation of the power gauge rating, we were asked 3 years ago to create indexes for NASDAQ based on the power gauge rating. They asked us to take their large cap, small cap, and dividend achiever indexes and overlay the power gauge rating, which we did, and that filtered out all but the bullish stocks, bullish and very bullish. And you can see over the 3 years, by the red column in the middle there, the NASDAQ Chaikin indexes have outperformed their benchmarks by a wide margin. I mean, the dividend achiever is up, an average of 33% versus 14%. So it's more than doubled, and these have, outperformed significantly as well. So with those indexes and their outperformance, that got the attention of New York Life's financial arm, Mainstay Investments. And through a collaboration with them, we are now able to offer money managers and their clients a portfolio of stocks based on the power gauge rating. It's now an ETF. So that hopefully gives you confirmation that if it's good enough for NASDAQ and New York Life, it is a reliable tool that you can depend on. So a little bit of more confirmation is that we are used by many of the pros, like hedge funds like Paulson and Soros, and quoted in the media. Mark is quoted at least weekly in CNBC. He was on Squawk Box last week. And we are written about numerous times in Barron's, more recently Forbes, and a number of the investment firms like Fidelity use this as well. So let's go on to the second step in the 5-step process, and that's how do you know what to buy? Okay, that's always everyone's biggest question. How do I know what to buy? Well, we make that easy by terming this a classic bull. And for a classic bull, you want it to have these 4 things. You want and I'm go through this on the stock charts where you'll see it a little bit more easily visibly. You want the power gauge rating obviously to be bullish. You want it to be trending up in price, and money flow and relative performance, and I'll explain why those are important, should also be strong. So let's look at another example of a stock that I own, Lam Research. This is in the technology sector, which I'm sure you've heard on the news. Technology has been very strong. It's had a recent kind of a meltdown, but it's coming back along with the banks. So technology's been getting a lot of press lately, but this was on my watch list back in February. And just as a side mention, I own 8 or 10 stocks at any given time. Anything over than that, I think, is a little bit of an information overload. But 8 or 10 really allows me to be able to manage this and scroll through those charts in my 15 minutes a day, my monitoring. The other list that I monitor daily is what I call my watch list. So if I hear about a stock or get one through our screener or whatever and want to consider it for buying, I put it on my watch list. And then that's the list I also scroll through every morning before they open and every night after the close, just to see what has changed and if anything should affect my buying decision. So Lam Research is a stock that I had on my watch list, and I bought it back in February at this yellow arrow, and you'll see it correlates to this little green triangle. These green triangles on our chart represent buy signals. And over here, you'll see there's a drop-down menu. So this drops down to actually 6 different buy-sell signals. The one that happened to trigger back in February was money flow. So it's saying there's a lot of money coming into this stock. So let's look at the criteria that make up a classic bull and why this qualifies. Well, first, the price is trending up. I mean, that's pretty clear. And this orange line here is like a 200-day moving average. And these dotted lines are like, I think people equate them to Bollinger Band, but they're actually Chaikin bands that really the price tends to stay within those bands. And if it goes above those bands, it's likely going to pull back. So if you own a stock and it goes above that band, it's a good time to consider selling it. Likewise, if it drops below those dotted line bands, it's a good time to think about selling it before it goes further. The reason to sell it when it reaches the top is to take your profit because it's likely to pull back. So this is a stock that I bought back here on this signal, and then I sold it up here when it went above that band. But the power gauge rating was strong. You can see it's the ribbon across the bottom of the chart here. And for almost the full year, other than a few intervals of neutral, the power gauge has been strong. So power gauge, based on 20 factors, has said this stock is likely to outperform the market over the next 3 to 6 months. And people say, well, gee, how do you know it works? Well, I say just look at any chart, and you will see that, yes, this is saying it's outperforming, and it is outperforming, right? It's going up. So it's pretty easy just to visually backtest it yourself. Relative strength is this next line, this kind of heat map here. And why is this important? Well, you want a stock you're going to be buying to outperform the S&P 500. That's pretty much the benchmark most people measure themselves against, including me. If you're not going to outperform the S&P 500, or have a goal to outperform the S&P 500, you're safer just going into the S&P 500 index account, which, as we showed earlier, is up 10% a year average over the last 20 years. That's not bad. But if you want these bigger returns, 50, 60, 70 and up percent increases year over year, you're going to have to find these types of winning stocks that'll give you those types of generous returns. So you want your stock to be strong relative to the S&P, which we see since, gosh, almost a full year with a small tick to negative. It has been outperforming the S&P 500. I'll come back to this line in a minute, overbought, oversold, but the other criteria for a classic bull is the money flow needs to be strong. And let me explain what money flow is. This is a indicator that Mark created over, 35, 40 years ago on Wall Street. And he did this, and this has basically made his name on Wall Street because this indicator, which is sometimes called CMF, is basically on every stock charting package and technical analysis workstation sold worldwide. So what this does is it measures money coming in and out of a stock. And you can see here where it's green, it means the pros are buying the stock. Where it ticks to red, the pros are selling the stock. So you say, well, who cares? Why should I care what the pros are doing? Well, you should care because they're the ones that move the markets. And Steve can speak to this better than I can as having been a specialist on the floor. But when pros are buying, it puts that stock in higher demand, which in turn raises the price. It's the old, supply and demand kind of equation. If there's more people wanting something, that something is going to go up in price because there's more people going for it and fewer of it to go around. Likewise, the reverse happens when money flow ticks negative. And you can see on these little spots of negativity, when everything else is positive, what happens? The stock tends to go sideways. That's how important money flow is. Whereas you see when it goes green and everything else is green, you can see that it really does have a really nice rise up. So I sold this up here because it went above that upper volatility band. I'm kind of combining buying and selling on this one chart. It kind of speaks to everything we're going to be talking about on the webinar today. But it was at a 52-week high. So I said, boy, I'm going to take my profit and be happy. So, 4 weeks later, I sold the stock. I got out at 9% profit. And I thought that was pretty cool. I'll show you why I got back into this stock on the next slide, but I just want to pause here and explain why I circled this February-March timeframe here on the overbought, oversold indicator. What this is, and I'll go to the next slide, is it measures basically the movement of a stock price. And this, when I first looked at it, I got kind of confused, but my eye has since gotten used to it, and I since really embrace this. But Dr. Wyckoff came up with this about 95 years ago when he was teaching about the stock market. And what he did was he basically charted the way a stock price moves. So in other words, it doesn't go straight up or straight down, as we well know. It doesn't go, sideways. It goes zigzagging. I call this, the Wall Street term is accumulation, throwback, reaccumulation, breakout, For me, it's just simply, I just say it zigzags. It's going to zigzag across. It comes up, peaks up, it pulls back, goes back up again, goes sideways, up again. So if you understand that this is the way a stock price moves, it's important because you want to buy it on these pullbacks down here, what they call throwbacks. You want to be selling it when it peaks up here, at the height of the zigzag. And if I go back to that previous slide, you can see that this overbought, oversold indicator basically charts that zigzag pattern for you. So you want to be selling, when it's up here at the top, which is considered oversold. You want to be buying when it's dipping down here, which it correlates to that dip. And you can see here, it does correlate to the dip. And that's why I bought it here. Stock was considered oversold. So this is a timing thing. But understanding the way this Wyckoff charts the actual way a stock price moves will really help you understand that. So I sold Lamb, but then I said, wow, this stock is still going up. And I don't want to miss out. And there's my buy signal back here. So that's where I bought it. I sold it up here when it bumped up against this volatility band. But then unlike most stocks that tend to pull back after they hit that band, it just kept going. And I said, I don't want to miss out anymore on this. And we have this cool little thing, this earnings overlay. So you can click this little button up here. It overlays the EPS. What that means is this is when the company has reported earnings, which they have to do every quarter. And the green means that they've exceeded analyst estimates. And that's what seems to move it, and when I first started investing, I didn't really understand that. But what I understand now is that it's not so much about whether that stock reached or was better than last year or not. It's whether it beat the analyst estimates and what the guidance is. And this tells you by the green that they've done well. Well, when I checked the 5-year view on this chart right before their earnings, I could see that for 5 straight years they beat analyst estimates. Well, that's just a wow. You know, that's just a really great time to say this is a great stock to get back into before they report in a few days. So that's exactly what I did. I rebought it when it came down on this little dip. Again, it correlated, look down here, correlated to this oversold condition. Everything was green, a little bit of red, but a little bit of red isn't anything to be concerned about unless it goes to a big amount of red. So I bought this stock back. And then what typically happens when they beat is a stock tends to pop up 10% or so, which is exactly what this did. So again, I sold it up here for 10% profit a few days later when it hit that and exceeded that upper volatility band. And I sold it at 140. The stock's now at 155, so it's still going. But sometimes you just got to take those profits and be happy with those profits. So how do I find these stocks? Well, there's a couple of ways. One of the ways I find them is on a report that Mark puts out every Sunday night to our subscribers called Market Insights. And this is a really great tool, really, to give you great stock ideas and insight going into the week. And one of the things he always does is to come up what he calls a stock of the week. Well, back in mid-April, he focused on 2 stocks of the weeks, Excelis and Entergys. So I bought both of those stocks, actually. I put them on my watch list. I bought them both, you know, on Excelis, which I'll go to now. I bought and sold this. I made 34% in 3 weeks. On Entergys, I made 9% in 4 weeks. So those are a great source of stock ideas. But let's look at Excelis again as a classic bull and why I bought this when I bought it. Okay, so this is back when I bought it in April when it and it first came up like a day or two ahead of then on Mark's, you know, stock of the week report. I added it to my watch list. And then when I look at my watch list every day, I can see the signals, and I'll show you how I do that, but I can see this, which stocks triggered buy signals or sell signals. So I could see a few days later, it triggered a money flow buy, which is telling me there's a lot of money coming into this stock, which by now you're getting the gist that I really love money flow and I depend on money flow a lot. So look what happens when that big chunk of money comes in. You know, the stock tends to just, you know, go up. So I thought that was a pretty good insight. The signals also are great alerts to say, hey, this, if you're considering buying this stock, this might be a really good time. Well, you know, everything else lines up. So obviously money flow doesn't know if the stock is oversold or not, but it happened to be oversold. You can see this dip down here. But look at everything is strong. So if everything's green and go, and I get a buy signal, and it's oversold, and it's on my watch list, that's kind of a no-brainer that this would be a good, and they're approaching earnings. That's really a no-brainer that this is a good time to buy the stock and a good stock to buy. I also could go back on the 5-year view and see that they had also, like Lam Research, beat earnings for the last 5 years. You might want to put this on your watch list. They're coming up to report earnings August 3rd. My guess is they're going to beat again, you know, and typically what they do, as they did here, is they spiked up after they beat. And then I held on to it a little bit longer and sold it up here on this second spike when it bumped up against that upper volatility band. This was a big winner for me though, because in 2 months, I was up over 34%. So I took my profit and said, thanks very much. And was happy to take that profit. And you can see when I sell, it correlated with this overbought condition up here. You want to be selling it, remember, when it's up here, because that correlates to the peak. And you want to be buying it when it's dipping down here on this overbought, oversold indicator, because that correlates to a dip in price. Okay, so is everyone good with that? It's okay to keep moving and go on to the next step. Maybe if you just put in that Q&A box, you know, to go if you're clear on the bulls, and if it's clear to you what constitutes a classic bull and how you identify them. Repeat the last point. Sure. Was that the overbought, oversold? Let me just back up a sec here. The overbought, oversold is this indicator here. The point I was trying to make is you want it, when you buy a stock, you want it to be dipping down here because that correlates to a dip in price. When you sell it, you want to be selling it when it's up here because that correlates to a peak, a spike. The old saying, you know, you buy at the low and sell at the high. That's kind of what this overbought, oversold indicator does. Okay, great. So let's move on. Thank you. So we do get a lot of testimonials throughout the year. Joe gets a ton of them because he works with our clients every day. But Norman B. here said to us that through following our system, his portfolio stands now in excess of $1 million. He said, before Chaikin, I would make money and then lose it. Consistent earnings, and I should underline consistent, were just not a reality for me. Chaikin has changed all that. I can't thank you enough for your tremendous service and excellent methodology. So again, you want consistency. And the way to have consistency is to follow the rules and the methodology and not your emotions. All right, let's move on to number 3. You want to buy strong stocks in strong industry groups. And well, why is this important? Well, every stock, and there's like 5,000 or so that we follow, every stock is bucketed into one of 64 standard industry groups, you know, medical, as you can see here, business products, utilities, aerospace, etc. So we rank stocks within those industry groups based on their power gauge rating. And the stocks that have the highest proportion of bullish power gauge ratings in an industry group, those industry groups rise to the top. So our rankings are based on strength of power gauge rated stocks within that group. So you can see here what the top industry groups are. And it's important to invest in strong stocks in strong industry groups because those are the stocks that typically have a much higher return than even, say, the strongest stock in a weak industry group. So go with strong stocks in strong industry groups. Now, if you're, say, following the news and you hear that, you know, banks are booming and technology is booming, etc. Well, here's banks, for instance. They've got 31 bullish rated stocks, according to our power gauge bar there. Well, you can flip through 31 banks to see which ones meet your criteria. Or you can take the easy way out, which is what I do, and use our screener. This is a functionality we introduced over a year ago, and it's been an incredible time saver. Because what you can do now is you can plug in your criteria, and then you save it as a list, which is what I've done. You can see up here Sandy's criteria. When I click on this little arrow, this isn't live, but when I click on it, it would give me what you see here. It would populate these fields. So in the stock universe, you can put the Dow 30, you can put any industry group. So if you want to just screen for say, bank stocks, you can do that. But I like to put in their strongest industries. And then what this system will do, the screener will do, it only give me the top 20% of industry groups. So I know I'm going into strong industry groups, which is great because there's could be unknown stocks I've never heard of that fall in that category. Then I plug in my classic bull criteria. Power gauge rating has to be at least bullish. I told you about those 3 factors that I like, price to sales. That means that, the stock is not overvalued. Short interest, the short sellers are considered the smartest guys on Wall Street. So if they're not shorting a stock, they're not expecting that stock to go down, it will be bullish. So I want that to be bullish or strong. And insider activity is really telltaling, because who knows more about a company than the people that work there, right? I mean, you probably know more about your company than any guy on the street would know, just looking at the statistics on a company. So I want insiders to be buying. There's a lot of places that'll tell you whether insiders are selling or not, but they could sell for many reasons. They need to pay a college tuition, they need to pay a bill, whatever. They're only going to buy for one reason, and that's because they think the stock's going to go up. So before I buy a stock, I want to be assured that those insiders are buying that same stock as well, putting where their money where their mouth is. And then the other criteria, money flow and relative strength, you want to be strong in those two. That's part of the criteria for a classic bull. Step 2, remember? And I plug in small and mid cap because they have been outperforming the market over the large cap recently. So that's my criteria. So I take a universe of 5,000 stocks. I plug those criteria in, and yesterday it came up with this stock of, it looks like about 10 or 12 stocks. So in literally 30 seconds, I've taken a universe of 5,000 stocks and culled it down to like 10. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 stocks. And I can save this. I can save this as a list, so I can refer back to it anytime I want. And I can also save it so then I can flip through the charts of each of those 11 stock charts, which is what I did. And I highlighted this one, Carlisle, because this is the one out of the 11 that I thought had the most promise for me. I didn't say, one of my criteria was not that it was oversold, but it happens to be oversold right now, which is good. And I mean, look at this. Does this look like a classic bull to you all? You've got power gauge performance strong since May, same with relative strength. And the money started coming in April and has been pretty steady. And look what happens when those things line up. I mean, this is so typical of what happens to stocks when all that green lines up. So it could be an interesting time to consider buying this. I mean, it's up at its upper band, so I would like to wait for that to pull back a little bit. At the same token, I don't want to wait till this goes up into that, peak position there, because that'll correlate to a higher price. So I would watch this for a couple of days. I'd put this on my watch list, and maybe wait for a oversold buy signal to come through on it, or I would just wait for that to kind of come off that upper band. But that's the thinking that I go through. I mean, that's my kind of thought process. And when I say that the screener saves time, it really does. And our subscribers attest to that too. I was saying there's not enough time in the day to do the work Chaikin puts before me in minutes. So I know we're all challenged with information overload today, but saving that kind of time and being able to screen for stocks with certainty really can put you in the better place. All right, so let's move on to what to avoid. And this is the classic bear. It's obviously the flip of a classic bull. And looking at the couple of examples, these are stocks that I have not owned. I thankfully have never owned a bearish stock. I sell it way before it gets to this point. But you can see what happens when things start turning south, as they did in June, or even January rather, or even mid-December. I mean, you see things look pretty good here. Power gauge rating was positive, money relative strength good, and a little bit of money coming in. That's okay. Price was up at around 44, 45. That's good. But look what happens. You get the money coming out, underperforming the S&P, and a bearish rating. and you don't want to own this stock and watch it go down like this. And you did get some sell signals along the way. These happen to be money flow. You can only overlay one set of those 6 pairs on a chart at any given time, but there were other like relative strength signals that were triggering as well, saying, hey, if you own the stock or want to sell it short, trade options on it, which a lot of our subscribers do, this might be a good time either to sell it short or sell it if you're long on this, because look what happens. I mean, this is like a classic down, down, and down, right? Let's look at another. Oh, let's look at the Wyckoff. Yeah, this is the exact opposite of what the positive Wyckoff is. Zigzagging, but instead of peaking up, it dips down, comes up a little bit more sideways, etc. So understanding that really helps walk you through this whole zigzag pattern. And again, it correlates as overbought, oversold. This maps it out for you and makes it pretty easy for you to see. All right, so I think, Joe, we've got another short poll here on Hertz. If you want to put that up. I mean, looking at this chart now, and you've now seen a couple of charts to get a little bit familiar with how these lay out. You see that it's a bearish power gauge rating, bearish relative strength, but there is money coming in. And you can see this stock is now starting to trend up. It's gone from about, what, $8 or $9 now up to maybe 11. So are you a bottom fisher saying, hey, this stock, I think this stock's going to be trending up now. Now might be a good time to get into it. Would you buy this stock now, knowing what you know with the Chaikin methodology, or would you avoid? And I'll give you a few seconds to plug in your answers.
Yeah, and just to chime in here, Sandy, as you can imagine, I'm seeing the results come through right now, and it's pretty one-sided. But I do see there are a few people who say they would consider buying the stock, and maybe it'd be if you're interested, if you want to share why you might think that. I'm not sure if it's a little bit of a gag, or maybe there is a reason to be optimistic about Hertz. But if for whatever reason you might think that you might want to buy the stock, why not just share that in the Q&A window? Though it does look like it's a pretty small number compared to looks like about 85% of the people who responded said that they would avoid the stock. So maybe I'm just a little curious to know about the 15% who said they might consider buying it.
Sure, we won't. Joe won't divulge your name. So just be brave and put that in there, because I do want to help you understand why you don't want to buy this stock. And I'll explain that, Joe, while you're looking out for their reply. But you can see the power gauge rating on the bottom has been bearish pretty much solidly since October. What that's saying, based on 20 factors, remember, there's 20 factors rolled up in there. It's saying we have a downside outlook on this stock. This stock is likely to underperform the market over the next 3 to 6 months. And lo and behold, you can see, here's the moving day, 200 moving day average. This is clearly spiraled down. Relative strength is also underperforming the S&P 500. You never want to buy a stock that's underperforming. These are like really clear-cut rules. You never want to buy a stock that has a bearish power gauge rating or a stock that has underperforming the S&P 500. Money flow is starting to come in a little bit, but you still have an awful lot to overcome. So just that wee bit of money, and it is kind of natural for stocks to have a little bit of ebb and flow of red and green. So just because it's gone green doesn't mean we, break out the banners and go for it. So I hope that helps those of you who did say you would buy it. I hope that helped convince you why you shouldn't buy it. Joe, is there any further reply on there?
There was somebody who mentioned a pretty interesting comment, just saying person thinks that it will go up eventually, but it could be an acquisition target in the future, for example, like Amazon buying Whole Foods. Very, very speculative, but an interesting perspective.
And that's getting you. That's what I would say to that, though, is that's allowing your emotions to get in the way. You really want a disciplined approach, because this stock could still tank down further. And with this type of a trend line on it, it is nothing I would speculate on. You know, go with something that has a lot more going in its favor. Strong industry group, you know, strong power gauge rating, strong relative strength, strong money flow. You know, that's where you're much more likely, your money's much more likely to give you higher returns than betting on a stock that everything's pointing to a downward spiral. Okay, let's go on to the last segment, which is knowing when to buy and sell. So this, I think, Joe, you said this was everyone's number one, or the poll's number one challenge, timing, right? When to get in, when to get out.
Yep.
And I know by the, you know, the research, this tends to be the biggest challenge for most investors. CNBC did a poll and they came up with the same evaluation. So see, we're as good as CNBC, and you guys are as good as the CNBC polls. You tell it like it is. Okay, so when do you buy and when do you sell? Well, certainly the buy-sell signals are very helpful, and I've been pointing them out along the way. And the oversold indicator, which I've been pointing out along the way as well. So how do you know when those trigger? You know, do you go through, you know, I mean, do you go through a list and just look for them? Well, no, you don't have to do that. We have in our system what we call the alerts view, which is this little yellow bell here that says 14. And what you can do is overlay that on any list. So part of my 15-minute a day routine is to overlay that in the morning and then go through and see which stocks have triggered not only buy sell signals like you see here, but it'll also give me other alerts like a power gauge rating has turned, or an analyst has increased their estimate. So things that can affect the price of a stock are highlighted in this alerts view. So I want to be alerted to what's going on, not only in the stocks that I own, the 8 or 10 stocks that I own, but I also want to be alerted on my watch list, because if I've got some money set aside from something I've sold and want to be buying something, I'm in the market to buy something, you know, just tell me what, you know, tell me what's changed, and, you know, that could impact my decision to buy that stock at this particular time or sell it. You know, you'll see the same thing with sell signals. So I ran this on my watch list yesterday, and I'm highlighting Activision here. So let's take a look at Activision. This had been on my watch list. I actually had bought and sold this stock last year, I think it was. It was a while ago. But it triggered this signal here yesterday, this relative strength buy signal here. And you see what I do is I put this on because the signals give you like a 70% confirmation. They work about 70% of the time. They're not like hard and fast, you must buy this stock right now. And what I like to do is see how well that particular signal worked on this particular stock in the past. So by picking that, it picks up the previous relative strength buys. And for the most part, they were really solid times. It doesn't mean that stock is oversold right now. In other words, dipping down. It happens to be dipping down right now. So that's a good thing. So that's why you can't just say, oh gosh, I got a buy signal, I got to buy it today. No, make sure other things line up as well. Make sure money flow is strong and oversold, you know, and then when all those things line up, which actually they're lining up here, you know, then it looks like a good time to say you might pull that trigger. I would wait. It clearly spiked up like 5% yesterday. You can see here. I would wait for this to pull back a little bit, but not too long, because I don't want it to go out of this oversold condition. That can be what, Joe, you know this more than I do. It's probably 3 or 4 days before it starts to trend up again. Correct me if I'm wrong.
Sounds about right.
Okay, good. Now, Mark also recommended this. He was on CNBC Squawk Box on July 5th, and he recommended this stock on that TV broadcast, and that's when it was 56, and it's now 60. What, 10 days later? Not even 10 days later. So, that's how powerful this methodology is. It really can steer you. Now, wouldn't you rather? Let me ask you this: those of you who were tempted to buy Hertz, would you rather put your money, say you have, say, $10,000, for instance, would you rather buy $10,000 of Hertz or Macy's, or would you rather put $10,000 into Activision? And maybe, Joe, you can just monitor those replies and tell me, because I hope you're going to tell me that you'd rather put it in Activision. That's my goal, is to convince you that you want to put it in Activision, not Macy's or Hertz.
Let's see. Yeah, here they come. I think there was just a little bit of delay. I see at least a few people saying they'd prefer ATVI over Hertz.
Okay, good. Okay, you get it. Perfect. Thank you, Joe. Okay, this is my last section. It's part of section 5, but I kind of put it in as an extra section. Know when to buy or sell, and these are my rules. These are rules that I've come up with that have really worked well. I've got a couple of examples of each, when I take a profit and when I take a breakdown. But I see it's 5:15 right now, so I anticipated I'd be running a little bit late. Joe, do you mind putting up a poll and seeing if the folks would like me to continue and explain my rules and when I sell, or if they'd rather just skip this? And
lots of responses, lots of continues. About 98% of people say continue on.
Wow, awesome. Okay, great. Thank you. I love that. Happy to. And if you can't stay, because I know it's 5:15, if you can't stay, as Joe said in the beginning, we are recording this and we will send it to you tomorrow morning. Anybody who's registered will receive it. So if you have to hop off, no worries, you'll get it tomorrow. Okay, when I sell, so as I said, there's two times. You either sell because you want to take a profit, or you sell because you see the stock breaking down. So you might want to write these rules down, because these have really, really worked. The price hits that upper volatility band. That's that white dotted line up at the top. It's overbought. That's that bought, oversold indicator. You want that to be peaking up, not down. Or the price spikes after a strong earnings report. And let's revisit Lam Research, okay? Because this kind of rolls up everything. Okay, I took this slide today, but earlier under the classic bull, I had two separate slides showing you when I bought the first time, when I bought the second time. So let's just look at it a little carefully in terms of these rules, okay? So bought it down here. Why did I sell it up here? We'll see it hit that upper volatility band. I'm a sailor, so I equate this to a channel. And when you're sailing or in a motorboat, either way, you want to stay in the channel so that you don't run into trouble like running aground. And I think of these channel as the same things. You want to stay within this channel. If you get up above here, it's likely to pull back. And likewise, if you go below this lower channel line, it's likely to continue going south. So, the take your profit. Okay, these are two examples of taking the profit. I got in down here, I got up here, got out up here for a 9% profit because it hit up against this volatility band. As I said earlier, I bought it back because it dipped down, oversold, dipped down, reporting earnings, and I knew that this stock, Lam Research, has a history of exceeding its estimates. For the past 5 years, they've exceeded analyst estimates every quarter. It's just about as strong as a track record as you can get. So I was pretty confident, because everything else was green, this stock was going to pop up, and lo and behold, it did. And it tends, stocks that I've done this with tend to spike up 10, 15%. And that is in a matter of days, which it was here. I think it was 3 days. So, you know, in 3 days, I made another, you know, nice 10% profit on this stock. But that's using these rules, you know, hits the upper volatility band, overbought, and spikes after a strong earnings report. That's that 10% I took on that second buy sell. Let's look at another one. Okay, this is a great one. Maiden Holdings. This is not a stock you'd want to own now, right? I mean, look at all this red. Even though the power gauge is neutral, everything else is red and it's tanking. Well, I bought it back in here, early December. It was on my watch list, found it on a screener. You know, a lot of the stocks I put on my watch list, I find from the screener or I get them from Mark's Market Insights report. So I had this on my watch list. I bought it early December when it dipped down. And look at how that correlates, oversold, right? You want to buy it when it's down. You want to sell it when it's up, peaking up here. Everything was green, lined up, a lot of money coming in. So I said, this has a good potential. And insurance was strong, you know, as is technology, you know, in the top 10 industry group. So, you know, that's all good. It went along a little bit of the sideways here, and then it spiked up to this upper volatility band, and I thought, wow, yeah, that's a really nice. It was up like 5 or 10% or so in a matter of days. I thought, wow, you know, this is a gift. I'm just going to be happy to take my profit. It's at the upper volatility band, and I'm going to get out of the stock. So I did. I sold it. I had a 17% profit. I sold it at 19. You know, bought it at 16. Made 17% in what, about 10 weeks or so. And then, once you know, 2 days later, that stock drops 10% because they pre-reported. I've never heard of a stock doing this or not, company doing this, but they pre-reported and they had lowered their guidance and the stock dropped 10% before they even reported. So, I mean, that was just, it was lucky in a way that I got out beforehand, but it wasn't so much as luck as making a consistent decision based on a methodology and rules that I've come to rely on. And that was when it hits that upper volatility band, that's a good time to sell. So let's, this is Anil. And then I'm sure Anil's lawn because he's such a loyal follower. He comes on all my presentations, which I love. But Anil has followed these rules himself. He started out just doing it once on one stock. He found that that worked. 23% profit in less than 3 weeks. And he said, okay, I've got more complex rules, but I'm going to set up a test portfolio and see how your rules do. And these are the results of the portfolio that he then tested with my rules. And so as you can see, they've been out, you know, doing pretty well. So the rules work, not just for me. Anil teaches how to invest in the stock market. The program within the University of Delaware's framework. So he's great Chaikin follower and user. We appreciate that. All right, so you might also sell when you see a stock breaking down. You want to get out of it before it tanks. What are the warning signals? And I suggest you write these down too. Power gauge turns neutral, and another indicator like money flow particularly turns negative. Certainly if you get a sell signal, I mean, that's like screaming at you, get out. Price drops below that orange line, the 200-day moving average line, or that lower volatility band. And here's an example, a very recent example, because I just sold this stock like a week ago, having only bought this stock a week prior. But that's how things can change, and that's why you want to go through the stocks you own, flip through them like I do, you know, twice a day, in the morning, at night, see what's changed, because things can change quickly as they did with this. I just bought this stock on the yellow arrow with the buy signal. On the just not even 2 weeks ago. It was the 27th of June. So what was that? I guess that was close to 2 weeks ago, at 78. It'd been on my watch list, strong industry group, all my factors, everything looked green. Look at this nice green, 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 oversold. So I thought, well, this is a good, opportunity to get into this stock. I had both an oversold buy, as you can see here, which certainly correlates to it being oversold condition, but at the same time, it triggered a relative strength buy. So I had 2 buy signals. So I thought, boy, this is nice. And a 4% dividend. But look what happened, like literally days later, power gauge turned neutral. Then days later, relative strength started to underperform and money flow started to underperform. And it dropped below the orange 200-day moving average and the volatility band. So, once I saw all that, I said, this stock is breaking down. I'm going to just, cut my loss, take a very small loss, and get out of this stock. So I was only in this stock for like 10 days or something, but I'd rather get out and take a small loss than watch it go down. And with this type of picture here, I could see that it wasn't going where I wanted it to go. All right, so I hope that really clarifies, and those rules have really kept me out of trouble, as it did with Maiden Holdings, and I'm sure I'm going to see Entergy drop more as the weeks go on. So those are the rules for selling, and I hope you embrace them as well, because they really have helped me become a much more profitable investor. And they take the emotion out. The whole point is to give you confidence with a methodology you trust, which is to follow these 5 steps. Tools you trust, that's the power gauge rating. Know what to buy. That's the classic bull that we outlined. You want to buy strong stocks in strong industry groups. And you want to know what to avoid. That's the classic bear. And you want to know when to buy and sell. And that's using the signals and the overbought, oversold, and those volatility bands to help you gauge that. So my promise to you when we started this was that you would discover how to find winning stocks and make buy-sell decisions with confidence. And I hope by now you are feeling more confident investors instead of fearful. And that in the beginning, I said, think about how you want to spend some of this money. I mean, the whole point for investing in the stock market is to make money. And it's okay to celebrate and take some of that money, go on vacation, do something that you want to do, but put a reward out there for yourself, and it makes it a lot more fun to work towards that. So John Malden is another well-known expert in the industry, in the financial services industry, and he's embraced what we've done as well. He says his analysts are enthusiastic users of Chaikin and use it to analyze the trades and recommendations of our writing team, giving them feedback and insight into their own ideas. The system's been integrated into our routine due diligence process for vetting and evaluating potential investments. So they don't write up a stock without checking the power gauge rating and the power Chaikin workstation to make sure that they've got confirmation from Chaikin that that's a good recommendation. So I've been showing you these charts. We call them the Financial Freedom Fast Track, powered by Chaikin Analytics. It's available on desktop, as you see here in these slides I've been sharing are all from the desktop, but it's also on iPad. So if you're on the go, you can check your stocks wherever you are. We recently, in May, won an award from Benziga at their Global FinTech Awards in May for the best stock idea platform. So we're pretty proud of that. It's pretty cool. Screener certainly gives you great stock ideas, as do Mark's Stock of the Weeks in his weekly commentary, Market Insights. So we've talked about some of the things that are included in Chaikin Analytics, not all of them. You can see on the right, this is an options overlay. We integrate with options play for high probability options trades that kind of do the homework for you and just tell you what the rating is on different option strategies. And Joe and Josh on our team teach options webinars specifically to our subscribers, so you can get comfortable with using that if you're an options trader. The screener we certainly talked about. I use that extensively. The 20-factor model. This is the only place you can get the Chaikin Power Gauge rating on your workstation. And what I didn't get into was we also have what we call a stock discovery engine, where you can plug in a stock like Lam Research, or in this case Goldman Sachs, and you'll get other stocks like it that have similar characteristics. We call it like a Pandora for stocks, where you seed it with a song, and it'll tell you other songs that you like based on that song you seeded it with. So our platform usually sells for $1,950 for a year. We have a webinar special of $300 off, or $1,650. But if you'll stay with me, I'm going to make this even better. We're really going to give you a deal you cannot refuse, because we are so enthusiastic about wanting to get you into the Chaikin methodology and start making more profitable investment decisions. But some of the things that we didn't have time to talk about are like the one-day chart where you can see the price as it varies minute by minute during the day on any particular stock. The earnings, I alluded to the overlay, but this is kind of a drop down of what that looks like. And the market insights, which I alluded to as well, which is where Mark gives his outlook on what he sees next week, where he saw the market come from this past week, his outlook, and with specific stock ideas like Excelis, which I was able to capitalize on and profit by a 34% profit in 2 months on that. So plus you also get these small group tutorials, and I really highlight these, particularly the one-on-one coaching, because our success depends on your success. So if you're using Chaikin the way it's meant to be used, you will have much better results than if you just try to do it on your own. So we put a huge amount of effort into coaching our subscribers. When you register as soon as tonight, you will be into a small group tutorial as early as tomorrow. I think it's at 2 o'clock, Joe, that you can register for, and you can register for as many as you want. And if you want specific one-on-one coaching, you can set up a call with Joe or one of his teammates to actually show how you can integrate Chaikin into your personal trading methodology. So, training is our thing. We really put a huge amount of effort and time into training you to be more successful. So we ran a special for 4th of July. It's the lowest price we've offered all year, $1,500 for the special. And it expired July 6th. But I said, you know what, let's offer it tonight. Let's try to get these folks in and give them an offer they can't refuse, because this is the lowest price we've ever offered for the analytics. It's the lowest price of the year. The price will never be lower. If you're on a webinar next week and want to buy, it will be $1,650 for the year as opposed to $1,500. So I encourage you to take action now, not only to get that extra $150 off your annual subscription, but get into tomorrow's training session. So you'll be ready to roll on Monday, with confidence, investing and trading with Chaikin Analytics. So Joe, I'll turn it back to you, but I first want to thank again Steve and your community there at Pro Trader Strategies. That's a tongue twister for me to say.
Yeah,
but I want to thank you all.
Hi, Sandy. Yeah, it's a little bit difficult to say, but thank you so much. I think the people will notice that you have a sound working methodology that has discipline and insight, and I think it will lead to consistency. So I think it really has a lot going for it.
It ties a lot with what you taught on Tuesday night, Steve, you know, the consistency and a methodology and rules-based.
Correct. And the discipline and following the approach.
Yeah, exactly. So the two systems are very compatible, which is great. So thank you for sharing your thoughts and for sharing your audience with us tonight. We really enjoyed speaking to you.
Well, you're more than welcome, Sandy. Thank you very much for attending today. And remember, everyone, you can see the links and the email address in front of you. So take advantage of that great offer, as well as the phone number there in the lower left-hand corner to get this special offer and to be members. Subscribe by midnight tonight, July 13th. If you have nothing further to add, Sandy, I want to thank you so much and thank everyone at Chaikin Analytics for being our presenter today.
Our pleasure, Steve. Joe, you have any words to close with?
Yeah, last few things. Well, everyone, thank you so much for joining us. As a reminder, we did record today's presentation. I know there were a few questions about that. Just as we pointed out at the bottom of the page, you can reach us 877-697-6783. Email us sales@chaikinanalytics.com, or you can just go right to our website, chaikinanalytics.com/Sandy. Sandy did mention we have one more support webinar taking place tomorrow. That's at 2 o'clock Eastern time. That is going to be our onboard session. We're going to show you how this whole platform works. You saw a lot of great benefits today. Sandy analyzed a lot of great examples, Hertz versus Activision Blizzard, for example. What we're going to do during tomorrow's onboard session is show you more how you can create your own list of stocks. I'm sure you have a lot of active positions out there. We're going to show you how to create those and really understand the analytics a little bit more in depth, which is important for everybody to hit the ground running. So make sure to join us after taking advantage of Sandy's offer here, $1,500 for a full year's worth of access to Chaikin Analytics. And again, we'll get you right into that onboard session. So I want to thank everybody again for coming out. Everybody have a great evening, and we will see you tomorrow for the onboard session.